This Twin Peaks Investing podcast is brought to you in association with SharePad from ShareScope, the UK's #1 investment data and analysis software for private investors and traders. Visit sharescope.co.uk and discover the advantage.
Welcome back, ladies and gents. Thank you for coming back for the second half of Twin Peaks Podcast 135 with my brilliant guest, Matthew Gregory, at Matthew Gregory 5 on X, my fantastic co-host, Henry Viola Hare, at HT Viola. In this second half, we're going to talk about Unilever. We're going to talk about Sylvania Platinum. We're going to get a deep dive and forensic history on Games Workshop from a fan, I think from the age of 10, maybe even younger, about all things Games Workshop and why he's also a passionate owner of the shares. So welcome back. We hope you enjoy this second half of this pod and you will share it with your friends. Matt, what I want you to do now, if you'd be so bold, right, is tell us about a couple of the stocks that you currently own. Without we don't do ramping on here, but some of the lessons that you've learned since you've owned them.
So, I'll give you one that I'm quite pleased with, and one that I'm in a situation similar to you with Atlantic Lithium at the moment, where things aren't going so well. So one of the ones that I'm quite pleased with is I hold Unilever, and I've been buying little nibbles of that every so often, and I've been buying it as it's been going up. And the reason why I originally got into it is I had quite a concentrated portfolio. I've been looking to just get kind of a wider portfolio, and I wanted to build some more defensiveness in. But the real thing that kind of got me to actually take a look at this was we did the shopping one day, and I was. I'm guessing you folks probably do the same thinking as us. Like you're going around the toiletries aisle and you're basically doing that. You're bleeping everything. You're putting everything all in the toiletries bag, and then you go upstairs to the loo, and you're basically taking things out. I thought, who makes half this stuff? Unilever shampoo, Unilever shower gel, Unilever. I'm spending a fortune on these guys. Why the hell am I not buying them? So I kind of had a little bit of a look.
It's the Phil Oakley investing strategy, mate. What am I using? What am I buying? Exactly.
Yeah, and so that was kind of the classic one that I when I read Peter Lynch's kind of like almost Bible of one up on Wall Street. It was kind of like I thought, I spend a huge amount of money on these folks. Why the hell am I not holding this? At least the dividend will mean that it pays for my shopping, if nothing else. So I've been nibbling away at them, and kind of like my thesis there is I was buying it actually in my initial bite into it did actually go underwater, as I was saying to Henry before we came on open Twitter, that I always classify me buying as a sell signal for the market. But I've kind of held on to it, and I was buying it when we were really in the teeth of the cost of living thing, where we were having prices we're at like 10% interest rates, and everyone was saying people are going from brands down to like they're going down. I was like going, yeah, we've pretty much always forever bought own brand clothes washing liquid. We've never bought like the name brands. But I was like, is someone going to trade down from Lynx to Tesco's extra value deodorant? Is someone realistically going to do that? And I was like, no. Personal care is one of those areas where people really do not want to make that trade down to the own value ones.
Good
Because at
call.
the end of the day, it's not like Estee Lauder or kind of like whatever kind of like Hugo Boss or whatever. It's shower gel. You're not going to stop washing. I mean, okay, Henry may go with his imperial leather rather than Lynx, um, but one of those things where I was like going, yeah, there's a cost of living crisis going on, but in terms of the personal hygiene products and that sort of thing, there's no way people are downgrading on these. So I can see that I kind of had a look at their books, and actually their kind of like personal care is one of their growth areas. That's like, I think that's like the biggest chunk of their income, if I'm not mistaken, or it's certainly one of the biggest. I think it's the fastest growing. And so yeah, I just began nibbling away on that. Okay, it's not like 10 bagged me or anything, but I mean, I think I'm up 15% on that at the moment. So it's better than a kick in the teeth as far as I'm concerned. And it
So,
pays a dividend, so it's continuing to add value to my portfolio. And yeah, so that one is one that I've been quite pleased with. The one that I'm umming and ahhing over, that I might get rid of. I thankfully only took one bite of this and then went, "Oh, I'm going to leave that one alone." And maybe probably should be adding. I'm torn between the devil and the deep blue sea. Do I leave it where it is, or do I add more? I'm going, I don't know. Is
tell us about it, and then we'll have a little
so
think about what to say about it.
So this is
It's not
probably
advice, but
a mistake on my part, because this one did me very well during the pandemic.
okay.
Is I bought back into Sylvania Platinum, um, and that one's kind of gone a bit wrong, and
Right.
I
Yeah.
am quite heavily underwater with that one at the moment. So
Let me pass
Oh,
thankfully,
that one to
it's my
let
smallest
me pass that.
holding.
Let me pass that to Henry, because I can see him
Oh dear.
biting at the bit.
I've got to say,
Thoughts on it, Henry?
you're tugging at the heartstrings here, Matt, because I own Sylvania Platinum and did very well on it. I got out very near the top, and I've watched it come down. And I've had a friend of mine that also owned it and has been pestering me for the last 18 months, going, "You're going back, you're coming back, you're coming back, you're coming back." And I'm like, no, because this is just falling off a cliff. I think for me, I've not looked too closely, to be honest, but I think the big problem they've got, the platinum group metals as a basket, the value's collapsed and it doesn't seem to be recovering at all. Then
Yeah.
you add in the fact that they operate in South Africa and there's an energy crisis going on over there. You can't get power. Prices have gone through the roof if you can even get power to the site. And they've got some really big operational problems as well as a weak platinum price. Would I buy more? Would I not? On the basis that I've been avoiding it for the last 18 months, I probably wouldn't put more in.
Yeah.
I'd be tempted to just sit and wait and see what it does, because with miners, who knows,
Exactly.
it could just keep falling.
Yeah, so that's the reason why I've chosen not to dispose of it, because it is my smallest holding. But I do sometimes look at it and kind of go, could that money be served better elsewhere? So I'm probably by the end. I've given myself until the end of the year to figure out what I'm going to do with it, and I have to make a decision by the end of the year. Am I going to keep this, or am I going to ditch it? And at the moment, I have to admit I am leaning towards ditch at the moment, because I just think that capital, yes, I'm going to have to take a loss on it, but I think I can just put that to work elsewhere in the market. Thankfully, Sylvania, I've actually got. I basically got a bit greedy with Sylvania, because this is the third time I've owned Sylvania, and the two times beforehand I'd done very, very well, because I bought in, I think, at 16 and sold at 32, and then bought it in the March of 2020 for 32, and rode it all the way up to 134, I think.
Well
So
done.
I was quite chuffed with myself with that particular one. I was a bit. It was. It's the thing that you always think buying a share is going to be the toughest thing. I found getting sweaty palms clicking the sell button on that one, going, how much am I leaving on the table here? But I thought, I think that one was close to that. I think that was my first ever three bagger. I think that one was.
No, it's good. It's the good thing about the lessons that you've learned there, Matt, and also your considerations and thinking about what you're going to do this time round goes back to the interview that I did with Lee Freeman Shaw, and him basically trying to get somebody, virtually by the scruff of the neck, shaking them, going, "Would you buy it now? Yeah, given where the share price is today, do you have the convictions to buy it again now?" Yeah. And if you're not willing to say yes to that, then often and not, that makes your decision up for you. Yeah. And that's what I had with Aberdeen European Logistics Income. Yeah. I'm not willing to buy it now here. Atlantic Lithium, same again. Not willing to buy it now here. If I haven't got the conviction to buy it now at this level, yeah, then I've got other convictions that I've got regarding other companies that I think would do better than the management that I've had with them for like 6-7 years. I'm thinking I can move on. And as Henry points out, all the different macro stuff and geopolitical stuff that's going on in that space, the mining space is alive and well with all manner of different things going on, shenanigans and all the rest of it. And a lot of the times, that's a space where other people going, don't do miners. You know what I mean? Don't do miners. So, but we all like to add a little bit of spice into our portfolio, so we then have a little bit in that space. And I've got some larger caps in that space as well in the mining side, and they tend to be able to mitigate some of that. But every now and then there's a lawsuit coming their way, and they're quite sizable. So you've got to be mindful of where you actually place your money and what sectors you put them in.
And the point that Henry raised about platinum group metals falling off a cliff, that was something which I hadn't looked at when it came to buying Sylvania the third time around, was what was actually going on in the actual material market. I was just looking at the company, and on face value, Sylvania is a quite well run company. But what I hadn't done is looked at what was going, because it's not a mega cap miner that's mining everything. So if one market's down, it can balance that off by buying something else. It's in that one metal group, which means that if the demand for that falls off a cliff, well, it's a one-trick pony. Now, there are some things in the PGM space which may help out in the long run. This is kind of one of the things which is making me go, let's think about this. Is some of the PGM metals, think it's palladium and rhodium, are used in as high quality anodes in electrolysis for producing hydrogen. So I know, like, the current main usage for platinum is in catalytic converters. But there are other material uses for the other PGM groups. So it's kind of like, okay, what's kind of going on in that space regarding them? I have some views on hydrogen. I think everyone's looking at the wrong usage of hydrogen, as it were.
That's a whole different pod, that, Matt, I'm afraid.
No, that's why I wanted to leave that there. I think
leave it there. Yeah. Let them go and investigate it. Thank you for that, though. Brilliant. Henry, we're gonna have a little pause there for a minute. We want to get some little snippets from you. Stocks you've been thinking about, what's been happening, any stocks you want to talk about in relation to whatever. What have you got, mate, that you want to share with us, and maybe inform and educate myself and Matt?
Well, there are two shares. I'm going to stay on the mining theme for a second here, because there are two big mega caps actually that before I go into this, the reason I want to talk about these, we've got market weakness, right? We started this podcast talking about market weakness. There's volatility. We've talked about Sylvania Platinum's falling. What do you do when the market falls? You know, the natural tendency is to panic. You want to sell. You think, how much worse is this going to get? Am I going to lose 50% of my portfolio? Will it ever come back? What will my wife say? What will my bank manager say? What will my dog say when he's got no food tonight? You know, how bad could this possibly get? I'd better sell everything. And actually, my psychology over the years has changed. And I get quite excited now when the market gets volatile because it throws up deals. So we talked, I think, last episode about my insanely long watch list. The reason I have this insanely long watch list is because prices aren't often where you want them to be when you first come across a company, but the company sounds interesting. The two companies, the two mining firms I want to talk about are Rio Tinto, the ticker is RIO, and BHP, ticker's BHP. They're both globally diversified miners. BHP is focused on supplying iron ore and copper, and Rio Tinto supplies copper, aluminium, diamonds, gold, and industrial minerals, with their dominant commodity again being iron. Now, both of these businesses are on fairly untaxing PEs. You know, we're talking 8, 9, 10 times forecast PEs. They pay chunky yields. I think BHP's on a yield of 5.3%, Rio Tinto's on a yield of 7%. They've both got double-digit returns on capital. BHP, we're looking at 26%. Rio Tinto, we're looking at 18%. These are very healthy businesses. And they tend to move as a sort of indicator of economic activity. So when sentiment around economic activity is strong and we think manufacturing is going to be strong and economies are going to be growing, we think therefore demand for metals and minerals is going to increase, and therefore these big miners are going to do well. The PEs tend to rise slightly, the prices tend to rise slightly, the yields tend to fall. But at times like this, where manufacturing over in the US is starting to slow down, construction rates are starting to slow down, the economy is looking a little bit wobbly, these firms are getting sold off. BHP is at 52-week lows of £19. It's just dipped under £20 a share against an all-time high of £30 back in 2022. Now, I'm not saying it's worth £30 today. I'm not going to put a price target on it, and I don't own it. But my question to you is, do you think this is going to be worth more or less in 10 years than it is today? Do you think there's going to be more or less economic activity than today or next year or the next 6 months? Because the market with these big mining firms, it tends to be very, very short term. They can be quite volatile. But actually, if you're buying at all-time lows, you can often make good profits on them just from riding them back up the economic wave as the PEs start to expand again. So they were two names I wanted to flag up to listeners to go away and do a bit of research on, I suppose.
This is a quick hello to you, our valued Twin Peaks Investing podcast listener. Whatever channel you're listening to, please make sure to subscribe and you'll always be the first to get the new episodes. Thank you for your continued support.
I own Rio shares, Henry. I purchased them in the nadir of 2020 at £32.49, and they were yielding something ridiculous. I think whatever it was at that point, because it was down in its knees, and then I trimmed it at 63 quid, and I've added and reinvested dividends since then. It's a sort of company which my only concern with them at the moment is that they become the acquirer rather than being acquired, because the consolidation stuff we saw when Glencore approached Anglo American, which I also own, that's the next stage, because it's getting to the point where, regarding your particular finances and the long-term time frame it takes to actually develop a mine, it's easier and more cost-effective to buy a producing miner, than it is to start a mine from scratch, and all the litigation and all the all the goodwill you need from various different entities within a government and the country to actually, dig and change landscapes forever and a day. So that's my only concern with Rio. I've never really been a fan of BHP, and obviously BHP of the size that they are, Rio's a bit smaller. There'll be consolidation in that space going forward. The yields there, it's on a low PE. Miners tend to be on lower PEs than tech companies, and it's one of them that you acquire when it's at or near 52-week lows, or 2 or 3 or 4 or 5 years lows, with a view that sentiment and cycles happen. It's very cyclical. So you purchase it when it's lows, you get the dividends while you wait, and you wait, and you have to have the patience to wait 3 or 4 years, and you often, with the dividends and with a complete change of cycle and sentiment, you can make 100% within 12 months, 18 months, 2 years. And that's unlike, we were talking about the REITs. It's generating 3, 4, 5, up to 8, 9%, these REITs. But if you lose 15, 20% on the fact that these REITs aren't producing any capital gains, what good is a 10% dividend or 8% dividend to you? I'd rather buy a miner, a big miner like Anglo American or Rio or BHP, have the dividend, and that give me a capital gain of 5, 10, 15, 20%, and compound that together with a CAGR compounding in my portfolio of 20%, 25%, 30%, than a deficit of 10% with a 10% yield in a REIT. So 2 good stocks. They will get their turn again. With regards to all of the isms and schisms regarding miners, I think a lot of it's linked to China and where they're going and how things could be within China. Have they absolutely loaded up with those resources and are cooling down their purchasing power of copper and iron ore and so on and so forth at present? That's a debate that's been raising for some time. But I tell you what, if they come out and say, actually, we're now buying it again, the re-rating on BHP and Rio and so on and so forth could be significant. Any thoughts, Matt, on that?
Yeah, I mean, you asked me to think of some companies before I came on, and Henry's neatly sunk my battleship as Rio was going to be one of the ones I was going to talk about. No, I think it's a really interesting one, because I know that obviously, you said Rio's main commodity, that is like its backbone, is iron ore, and obviously with China having its property crisis at the moment, that is one of the things that's weighing heavily on iron ore price. I think you're very much right, Peter, in the fact that it could be an acquirer, because as you mentioned, Henry, Glencore tried to bid for Anglo American, and obviously the big crown jewel that Anglo has is a much bigger exposure to the copper sector, and there are, as far as I can see on the news, rumblings that Rio would like to have a bite of that. And I almost wonder if Rio needs to acquire something like Anglo to avoid itself being acquired by a larger miner. Plus, also, as you said, Peter, it's a lot easier to buy an existing mine than it is to open a new mine. And if we look at, I know copper is quite heavily down at the moment, and this is going to be weighing into various sentiments. But if you look at the long-term demand for copper, the demand for copper going forwards in terms of with renewables, actually, if we want to do heavy amounts of electrification of vehicles and whatever else, the demand for copper is potentially enormous going forward. So I think it is. I think it's a really interesting company. It's very well diversified in terms of what it digs out of the ground, and I think with a bolt-on acquisition that may hit share price in the short term, it turns it into a company which hopefully won't be acquired by somebody else further on down the line, because it will be too big then, and it gives it what it really is looking for, which is a bigger exposure to the copper space, which is, I think, the metal that's going to be the in demand thing going forward in terms of the base metals.
Absolutely. I'd said we won't mention NVIDIA again, but if you look at all of the stuff that's going on regarding AI chips and all the rest of it, all the other companies that are involved in that, the amount of copper that's needed within these chips is absolutely staggering. So yeah, so we've got lots of different spaces and places that copper is required for the electrification of everything.
It's interesting when you mention
Sorry,
in NVIDIA. It's kind of one of those companies which has kind of haunted me for my entire life, as it were, because of course NVIDIA is primarily for me a gaming stock, very very important in the gaming industry.
And that's where that's the space that they were in. You know,
yeah,
they was the gaming of.
And
yeah,
the fascinating
GPUs.
story with them, and I'll leave this as a minor anecdote. But back in the late 90s, Sega were working on their last console, the Dreamcast, and they had two companies who could produce the chips for them. A now long gone company called 3DFX or NVIDIA were the two companies who were bidding for that, and the company they went with was 3DFX, not NVIDIA. And it happened to be that the head of Sega at the time liked NVIDIA and gave them $5 million. What he didn't know is that $5 million was the only money NVIDIA had in its bank account. Back in '97, they almost went bust. They came within one payday of going under.
Wow.
And it just happened to be that their next chipset they came out was the M2, and that's essentially the one that meant they leapfrogged over 3DFX and became the dominant player in the gaming space.
Amazing. I did not know that. I didn't know that. Did you, Henry? Did you know that?
Not a clue. Not a clue.
So this is it. Look out for companies that nearly go bust that are in tech. Apple nearly went bust. Yeah. NVIDIA nearly went bust. I think Tesla nearly went bust, you know, because he was making stuff up for ages and telling all kinds of porkies. Amazing. Right. I've chosen this stock here. I want to talk about it very briefly, Matt, in homage to you. And I've not mentioned it to Henry because I don't want him to absolutely assassinate it as he normally does. Right. But you talked about the fact that you're essentially a software engineer. Henry and I were invited to a gig, GopherCon, a couple of weeks back with Sam Bell. Absolutely fantastic day. Met all these software engineers and development guys and ladies, and we had a good chat about various different things, which just completely went over my head. About, hey, you need to learn this, you know, Go. It's all about Go. I'm going, Go what? Developing software. Anyway, so I'm going to read this a little bit first so people get an understanding of where I'm going with this. DevSecOps, this is not news to you, Matt, to everybody else, is a framework that integrates security into all phases of the software development lifecycle. It involves introducing security earlier into the software development process and expanding the collaboration between development, operations, and security. DevSecOps aims to reduce the risk of releasing code with security vulnerabilities and to automate the protection of the software delivery cycle. So, why am I talking about this? In homage to our guest, the stock I'm talking about is GitLab Inc. that provides DevSecOps platform, a single application that brings together development, operations, information technology, security, and business teams. The DevSecOps platform is built on a single code base, unified data model, and user interface. Not much of it makes any sense to me. I'm just reading it out, guys. Right, but the reason why I'm talking about that is I looked at this a little while back after coming back from this event from Matt. I thought I must get into that space, but I don't want to buy NVIDIA. I don't want to do this. I need to buy a code name. And I looked at this and two other stocks, and I had this on my periphery as something to buy and to give myself a little bit of exposure to US development stocks as such, and in that sort of space. And lo and behold, a bit like Henry, sitting there with his little watch list, and you're waiting for something to happen. Boom. today, because I didn't do enough research on the stock, I didn't know when their quarter was up. The stock came out today with news and smashed all its metrics. And let me just read some of this metrics to you. I have to put this in bold, right? Revenue estimated beat. Revenue year on year beat. Subscription revenue beat. Subscription revenue change per year 33% beat. Next guidance, next quarter guidance, what they've told that they're going to get beat. Everything's a beat going forward. Full year revenue guidance for 25 is going to be a beat. Yeah. Every single metric smashed it. At some stage today, they're up 22%, right? GitLab is a $8 billion market cap company. 52-week range is $40 to 78. And today it was up, at the last time I looked, it was up 16% after those numbers. And up at £52 per share, $52 a share, 8 billion. And talking about people maybe taking them over and all the rest of it. I'm not going to go into too much details about that anymore. It's one of them stocks that I think, given the Q2 revenues came in with earnings per share of 15 cents versus 10, revenue came in for the quarter at $182 million versus 176, and the guidance is up already for Q3, and the guidance for the full year 2025 is up again. Just keep an eye on this one, ladies and gents. If we have another little isms and schisms in the market and it dips back below $50, it might be worth considering. It's only 8 billion, which is tiny for their sort of market cap companies. Have a look at that, given the space that they're in, given the fact that loads of guys and ladies out there are developing software, and all of them need to have code that's secure for us to be in this AI environment, and other apps that we use need to be secure. It's one of them companies that's in the picks and shovel space of tech. GITB is the ticker symbol. Have a look. Matt, have you ever heard of that one?
So not that one directly, but I know the tech it's built on top of. So obviously GitLab means it's being built all around the revision control system, Git. Basically, this allows, so Git in itself is what's called a revision control system, which allows software developers to multiple software developers to work on the same project together. So you're writing your code, and you basically push your changes up to a server, either on your campus or on the cloud if you're a team around the world. And if I pull the latest build down, I can build it locally. I can make some changes and then push them back, and my other fellow engineers can do the same thing. Way back in the midst of time, even before I got into software development, teams would essentially be in the same office, and there would be a master computer in the room, and basically you would check files out by writing down on a piece of paper what files you were working on. No one else could change those, and you'd basically write to a floppy disk and then take your floppy disk over to the computer and copy and overwrite the files, and just hope that no one had been cheeky whilst you were doing your stuff and change things. So it also allows for you to look at all the changes that have been made and basically walk backwards and forwards through time to see what changes have been made. So for example, when we had the whole CloudStrike thing happen.
CrowdStrike. Yeah.
And so ironically on the same day, Microsoft had a minor blip with Azure, and it was all kind of like thought to be the same thing. Well, because Microsoft was all cloud-based, it would be easy for them. But actually, both companies sort of solved it in the same way by going, "Oh dear, our code's just gone bang. Okay, what's the last previous good version? Get that build, push out." And that's generally what tends to happen when somebody pushes out an emergency quick fix. The fastest emergency quick fix is to undo the last thing you did, and so that'll be what this will be built up on top of. And so I'm just kind of looking at a few things they've kind of got going on here, and it's kind of like a whole suite of tools. around kind of like continuous integration and delivery. So that's like basically building your product all the time. So you've always got a valid build. It looks like they're leveraging some kind of AI here, and then automated software delivery that's going to be pushing out towards your customers. And then they're building in some security stuff, and then they're doing some vulnerabilities testing, integrated testing of your code as well. So that'll basically be allowing you to put in automated testing, so as part of your build to say that's a good build. Not only does it compile, but it also passes this bunch of tests that you might put in, and automated value and automated delivery and all that sort of thing. So it's an interesting one. There are a lot of players in this space. Though this is a very, very crowded market, and you can also essentially build these solutions from open source software as well. So Git in itself is open source and free if you want, and there's multiple flavors of Git and continuous build services. There are some free ones, there are some paid for ones. So what they've done is that they've taken a lot of separate products and actually built one holistic thing, which especially for smaller studios, it can sometimes be easier having an all-in-one, whereas larger companies will often be able to have designated developers whose entire job is just to look after. Quite often you have like what's called build farms, where you have basically servers whose the only thing they do is basically continuously build and test the codes essentially. So it's an interesting one. I can see there being, especially in the smaller space, this being a very interesting one. But it is a very crowded space would be the one thing I would say. But if it's doing well, it's doing all the right things.
No, brilliant. Thank you for that. I'm conscious of the time we've had you on here, and I'm conscious it's nearly Henry's bedtime, and it's now 8 o'clock. Yeah.
Dad, can't I stay up a bit longer?
You can for about another 5 or 10 minutes, because I'm conscious at the very beginning we promised certain individuals who love nothing but Warhammer that will give you the opportunity, Matt, to share your love of Warhammer. You can show people your library to the is that the left or your right? I can't. Your right hand side.
Yeah.
And also I think probably the stuff that you've got there is probably worth a fortune. So please don't tell anybody where you live. But you're also a shareholder, I believe. So just talk a little bit about that. Is not 10 minutes, mate. Make it short and sweet, because I will literally fall asleep if you go too deep in this. You and Henry can stay on here and carry on talking about it after I'm long gone. But tell us a little bit about the Warhammer stuff, where it started, how you developed into it. You said role play, and I was conscious that for all the people that were listening that it was a PG role play thing you were talking about with board gaming and nothing else. So Warhammer, gaming, so on and so forth, and of course Games Workshop. Over to you, sir. So
of my library, you mentioned to show these earlier on. So this is kind of how far back I go back in terms of Warhammer. This by here is the original rule book for Warhammer 40,000. It was Rogue Trader at the time, and that's essentially what is now Age of Sigmar. But this is the first version of where Warhammer Fantasy Battle got to where it was. The interesting thing is, it used to be that Warhammer Fantasy was the primary line and 40k was the secondary line, and it flipped over in the late 2000s.
For the non-nerds, when were those two released?
So Warhammer Fantasy, or Warhammer as it was, I believe came out in about 83, I think. It was like the first edition.
Wow. Is that how long it's been running?
Oh yeah. Well, I mean, essentially, Games Workshop.
40 years, man.
Oh yeah, Games Workshop was bouncing around for a while and started. It's now based in Nottingham, but it was originally started in London. And where Games Workshop got their big break is back in the 80s, when the role play games, and the granddaddy of them all, I've got down by here somewhere, is Dungeons and Dragons. I've got all the books down by here, so
D&D, yeah,
that's one
D&D.
that
I know that
Hasbro
one.
now
Okay,
owns.
okay.
So at the time when that one came out, getting hold of a copy in the UK was a fortune. There was lots of things to do with being shipped over, but also with massive import duties. So Games Workshop gained the UK rights not just to distribute but to print D&D in the UK, and a few other companies did the same thing. Chaosium did that with Call of Cthulhu, and so you'll find a lot of the really old UK versions of Dungeons and Dragons have Games Workshop on the side of them. Because they were being printed in the UK as technically a tax dodge. They would basically send the books over. Games Workshop would then copy them, have them printed here, rebounded, and stick their name on them. They still have the old TSR logo, but then Games Workshop was on there, so they were printed in the UK, so they became a UK product.
Wow.
And so that's where Games Workshop got their start from. And then at the same
Everyone
time,
needs one. Everyone needs one.
yeah, and at the same time, they began wanting to produce their own IP, and they started off with Warhammer. The very first edition of Warhammer was just literally a single battle in a box, essentially. And then there was a second edition that came out about a year or two later, and that one allowed for a little bit more of a mini campaign, so like you played a couple of battles back to back, but it was still very scripted. But there was a few rules for designing your own army lists, and then when third edition, which is this is when it all solidifies, and each model you basically set an army size as being, hey, this is going to be a 1,500 point battle, and then each particular individual soldier will be worth so many points. So you buy units of n number of people, and depending upon how good they are, costs x number of points when you basically field your armies and go to war with one another. And in 87 they wanted to do a sci-fi line, and that was started off as Warhammer 40,000 Rogue Trader, and that ended up becoming their mainstay by 2016 or something. Well, by the 2010s, Warhammer 40,000 had overtaken Warhammer Fantasy and become their main line, and that was why they ended up killing off the fantasy line and kicking off the Age of Sigmar. And they've recently resurrected Warhammer Fantasy Battle as Warhammer the Old World. Is essentially them bringing back the old fantasy line. And so that's kind of a whirlwind tour of Games Workshop.
Whether you are an experienced or new investor, you know how valuable it is to conduct portfolio enhancing analysis and to have easy access to data that will give you the edge. As a Twin Peaks investing podcast listener, you can access an exceptional offer via SharePad from ShareScope, the UK's #1 investment data and analysis software for private investors and traders. This special Twin Peaks offer is available to new subscribers only, and you can subscribe using the promo code TWINPETES. The incredible and exclusive offer means that monthly subscribers will get their second month free, and annual subscribers will get their 13th month free. Sign up and subscribe to SharePad today using the Twin Petes promo code, and you can save up to £69. Visit sharescope.co.uk/SharePad for further details and subscribe to the investing and trading analysis and data you need.
Wow, that's me educated. I know Andy's chomping at the bit to say something, but I'm quickly going to ask you one question before he does. At some stage, you saw the company doing rather well.
Mm-hmm.
Did you invest in the stock? Do you own the shares?
I own them now. I had and ahed about buying for a long time, and it was back when I was getting in, to investing but didn't understand things like gross margins and operating margins and all that sort of thing. So it wasn't one of those companies that was being talked about at the time. So I really didn't get into it and actually investing in it until basically during COVID, was when it kind of came on my market. I was very fortunate enough to have bought Games Workshop and my second bite of Sylvania Platinum, both in the March of 2020, and then basically sold off my Games Workshop and then bought back into it because I thought I just made enough money that I wanted to keep some of it, please. And I was also looking to buy a house at the same time, so I needed some cash.
Makes sense.
So but no, I own it at the moment. It's it's one of those companies where one of my reasons for owning it is I don't play it as much anymore. I mostly play the role play game Warhammer Fantasy role play. And for those of you who want to know what a role play game is basically it's kind of a board game without a board. It's effectively let's pretend with rules. You kind of collaboratively tell a story together, and you basically have maybe have some maps and might be some miniatures, but you basically each person plays a single character, and the settings for different games range from fantasy all the way through to the modern day, to period pieces, to the far future, and everything you can think of in between. There's games for every taste, and some even tie in with big franchises as well. But the reason for me why I bought back into it, and I still stand by it, is it's what I call the Waterstones test. If you go into Waterstones and you go into the fantasy section, there are 3 IPs that you will see that are not movie tie-ins that have books in the fantasy section. You'll find there's usually some Forgotten Realm stuff that ties into Dungeons and Dragons will be in Waterstones. I don't know if you're getting as much anymore. It's dying down a bit, but it's still in there. Is World of Warcraft, and the other one that's there is Warhammer, is in Waterstones, which that means it's got a big enough cultural cut through to be alongside Lord of the Rings, Game of Thrones, everything else you can think of. That is an IP that has hit the mainstream psyche, and an IP is kind of one of those things where they're incredibly hard to build, but once you've got it, it's almost especially like that, they're almost unassailable to break through, because people complain about maybe how expensive the miniatures are and that sort of thing, but people love engaging with the setting, and I don't know if they'll pull it off, because it sounds like it's in a bit of a flux at the moment, but we'll have to wait and see. But if they can pull off the tie-in with Amazon and do the live action thing, then I'm convinced that as long as nobody does anything stupid at that company, Games Workshop are at some point going to end up in the FTSE 100. That is my personal thoughts there. I think they can do it if nothing stupid happens, but I think they're able to pass on the price to their customers. I think what they're being held back by at the moment, why they're range trading where they are, is I think they're still seen as a COVID stock, and I think every time they beat expectations, everyone's expecting them to always miss expectations. I think there's this in analysts' mind and in investors, that at some point the COVID rush is going to fall over. I think what people are forgetting is we've hit that point in time where people of my age who got into Warhammer when they were like 10 or 11 have got kids who are 10 or 11 again now, and a lot of dads are re-engaging with Warhammer because of their kids. So they've kind of hit that second generational hit, and I think that has obviously been spurred by COVID, but I think it's becoming a reinforcing thing, like a way of connecting with your kids, something that you enjoyed as a child.
Good call. Good analysis as well. Well, the market cap's currently 3.4 billion. Probably needs to be at 4.5, just under 5, depending on what happens to get into the FTSE 100. And there's always going to be ones dropping out who don't do so well, who have a deep water crisis, maybe, and get halved. Henry, we've not spoken to you for ages, it feels, mate. You've been sitting there just going, yes, tell me more about Games Workshop. I used to play that. So what do you want to say about all of that stuff, mate, regarding Games Workshop? I don't own the shares. Matt obviously does, but fascinating history as well.
Yeah, I mean, I love it because it's a Nottingham business, so it's always going to have a soft spot for me. I did used to collect. I started out with the Lord of the Rings miniatures when I was at school, and I used to enjoy painting them. And then I followed that down the track to the Warhammer and the Warhammer 40k. I've got a case at home somewhere, tucked away at the back of a cupboard with some very badly painted miniatures in. The thing for me, it's always just looked expensive, but it's a very, very good business. It beats expectations. Revenue shot through the roof. It pays a 4% yield. It's got a 70% return on capital. These are absolutely eye-wateringly good numbers. Back in 2019, you could buy the shares at £40, I think they were. They went all the way up to 120. That's a three-bagger sat right there for a company that sells plastic toys and books. But they've diversified and diversified and diversified. They've got video games. They've got a TV channel now. They've got the books. They've got the games. They've got Games Workshop World in Nottingham that you can go around. And like
I
you
highly
say,
recommend going there, even if you don't play. It's amazing to see the artistry there.
Oh yeah, it's fantastic. Absolutely, like really, really is. It's great. If you'd sold it at the highs of 120, you could have bought it back a year later down at £60, and it went back up again to 120. So not only could you have had a three bag, you could have come back again and got another bag out of it. Where's it going to end up? Maybe in the FTSE 100, like you say. Maybe yes.
Absolutely.
For me, I've got a terrible track record with retailers. So although I like the IP, I'm leaving the money there for someone else to make.
We're going to have to find, Matt, between us, we're going to have to find a book to educate Henry how to buy the right retail stocks. Yeah, because I think he's never forgiven Woolworths for going out of business with his pick and mix. Is it Woolworths or Littlewood's? I forget.
Woolworths. Woolies, mate.
Woolies.
Although only the US one.
Only the UK one. Sorry, yeah.
So the UK, sorry, yes.
After the pick and mix went, he's like, I'm never gonna trust a retailer again. That's what's happened to him. Guys, sorry, Matt, you're going to quickly say something.
I was going to say, you mentioned about like buying in. That was one of the things that kept me away from Unilever for a bit, was that it was trading at a PE of about 20 or 21, I think. And I was like going, oh, is it? And then I finally went like, you know what? I'm just gonna buy this. You know what? And if I hadn't have, it's now like just below 50 quid now. I think I got in around about the 40 quid mark. It did go down to about 38, but then it's kind of quietly marched back upwards. And I think that's the sort of thing where I think if the company does all the things that you want and it's not insanely priced, so I would classify Tesla as insanely priced at like 660 PE, you're asking the moon of that. But when you're on like 20 or 21 and it's a very well run company, it's expensive because it probably should be. You're trying to buy a Porsche for the same price as a Polo, essentially.
Good analogy. We'll have to leave it there, gents. We've been going for an hour and a half, and the rest. Matt, we might have to get you back on here, mate, because I don't feel we've covered a lot, although we've been speaking for a long time. I can see from Henry's little grin on his face and his very, very happy posture that he's loved you being on here, as have I. It's been an absolute delight, mate. Thank you for sharing your backstory. Thank you for sharing the insights regarding the stocks, your first stock, BP especially, and then this insight into Games Workshop. I suspect the vast majority of people that are on Twitter/X don't know the history of Games Workshop as well as you do, or Henry does for that matter. And it's great to know that you've gone deep into it. You've got the books, you've got the collections, you know where the beginning, middle, and the current sort of situation with them. And you're also invested in it. If you're going to be that invested in it, why not buy the company? Why not buy a stake in the company? That's exactly what you've said, and you've done it with Unilever as well. So thank you ever so much for being on here. It's been an absolute pleasure. Ladies and gents, if you've enjoyed this pod with Matthew Gregory, please follow him on Twitter at Matthew Gregory 5, and that's Matthew with 1 T, HEW Gregory 5 on Twitter, and give him some feedback. Tell him what you felt about his pod, what he shared, his thoughts on stocks, and connect with him. Follow his account, engage with him, tell him what your thoughts are, and give us some feedback, and share it on whatever platforms you're on, and follow us on Twitter X, and also follow the Ethical Entrepreneur, which is Henry Viola here, his blog as well. I think we're getting a write up about something. Henry, you promised me last week you're going to write something. It didn't. You went off. It's
just been published. The weekend. You've missed it.
Have I missed it? Oh no. Well, you'll have to talk about it next pod then. Tell us about it next pod. Apologies. So, Henry, passing words, mate. Last words, please.
Thanks for tuning in, and Matt, thank you very much for being a guest. You've been an absolute star, and thank you for supporting the pod, and also for supporting the charity for all these years, because it's very much appreciated, mate.
My privilege.
Yeah, absolutely. Yeah, if you haven't done so, ladies and gents, please go to the Just Giving page for Henry Viola and make a donation to Centrepoint if we can. We're trying to get to 5k before Crimbo. If you listen to this pod and you enjoyed it, just drop us £2, drop us £5. It's not going to Henry, it's not going to Matt, it's not going to me. It's going to go to Centrepoint for homeless young people. Ladies and gents, that's the end and the conclusion of the marathon two-parter of podcast 135, Twin Peaks, the cinematic edition. I hope you had your popcorn out and you've listened for the last, 2 days to get this podcast out. But it's been absolutely fantastic to have Matthew Gregory on this podcast with us. And obviously Henry was here doing his usual fantastic insights as well. I've tried to keep up with these two intellectuals as best I can, holding on to the coattails. If you enjoyed this podcast, please share it with your friends and other people on social media. And if you enjoyed it enough, please, please, please make a donation to the Just Giving page that Henry's got up for Centrepoint. And until the next pod, we will look forward to seeing all of your feedback, all your comments on various different social media platforms, including YouTube, for this pod. And I want to say a big, big thank you again to our fantastic guest, Matthew Gregory 5 on X. Please follow his account on X. Please follow Henry's account at HT Viola on X, and follow his Ethical Entrepreneur blog as well. And you can also follow me if you wish on X at Conkers3. Until then, take care, God bless you, and we'll see you in podcast 136. Bye-bye.
This Twin Peaks Investing podcast is brought to you in association with SharePad from ShareScope, the UK's #1 investment data and analysis software for private investors and traders. Visit sharescope.co.uk and discover the advantage.